Who thought we'd still be talking about PPP here in January? But things continue to evolve and change. So thanks for making some time to learn about some of the changes that are going on now. So a few of the things we're going to talk about. We're going to talk about PPP1, that is first draws. You may be still available for first draws. But now one of the big changes here is now there are second draws that may be available. A few forgiveness changes, and as we have time, we'll ask questions. I ask that you put all your questions in the chat, and the reason for that is not only so we can kind of coordinate questions, but also it gives us information so we can help design these seminars going forward to make sure we're addressing the issues that are most important to you. So if you do that, that'd be good, because I expect we'll still be talking about PPP for a while. This is not all the details. It's more going to be more about some high level overview, but hopefully it'll be very helpful for you. Boy, especially in the last week, you can sure say that this area is quickly changing. As you know, the Consolidated Appropriations Act was signed the last Sunday of December 27th. And last week, a whole bunch of new forms, rules all came out. In other words, they had to get everything done before the inauguration, because then the people that made the rules will not be making the decisions anymore. So on the 19th, on the evening of the 19th, it's amazing all the information that pushed out. So, but that doesn't mean that things won't be changing. Congress is currently in session. They're already talking about making some additional stimulus changes. Maybe there might be more PPP changes. Stay tuned. Also, there'll be some new decision makers at the SBA. Maybe they'll have different interpretations, maybe not. We'll just have to find out how things happen as they go forward. So with the understanding that this is based upon what we know today, and what we know tomorrow may be different, let's get started. So what I'm calling PPP1, or what the SBA calls first draw programs, are back. So as you are well aware, these programs, the ability to ask for a PPP loan ended on August 8th. Well, effective on December 27th, you can ask again. And this is for dollars for the PPP first draw program. Time's been extended to March 31st. So you may be able to ask for, if you didn't ask for funding in time, you can do it now. Maybe you're some of the additional businesses that can now apply. The rules were evolving with the whole PPP program, and some of those changes may have impacted the amount of your loan. If that is you, you may be able to ask for additional funds. And if you repaid your loan because you weren't certain if you had to or not, and you've decided you really didn't need to, you may be able to take care of that too. But all the loan terms remain the same. So they didn't change the loan program itself. So the loans will have an interest rate of 1%. Since this will, by definition, have to be a loan issued after June 5th, 2020, it will have a maturity of 5 years. Your payments are deferred, and they're deferred until 10 months after the end of the covered period. So if you are going to use a 24-week covered period, if you allow me to round, I always think of that as 5.5 months. Well, that means you got 5.5 months for the end of your covered period, and then you have another 10 months after that. So it means 15.5 months. As long as you've applied for forgiveness by then, you don't have to worry about making payments. There's no collateral, there's no personal guarantees, and there'll be no direct fees to the businesses as part of this program. No, the lenders are not doing this for free. They are being paid, but they're being paid directly by the government. They're not adding it to the loan, which is what happens with most SBA programs. So who can ask for additional funds? Well, basically there's three groups of people that can ask for additional funds for calculation differences. And that is partnership. So initially, if you were in the early applications of PPP, because you want to make sure you got in there before the funds ran out, it was unclear whether partners in a partnership could be considered in the compensation formula. Well, they came out later and said, yes, partners can. So if you applied before the rules changed so that partner compensation can be considered as employee compensation, you can modify, ask for the additional funds for that change. Also, in the calculation for seasonal employers, those rules evolved. Rather than picking a specific period of time for your 12 weeks, you're allowed to pick any 12 weeks to look for what you would have done in that period of time. That change may have impacted your calculation. Also, there's a revised formula for farmers and ranchers. Not going to go into that here, but if you happen to be a farmer or rancher or have clients that are, there might be an opportunity for additional funds. So notice that these are for changes in the rules during the time. That's why they're saying this can happen. How about anybody else? Can anyone else do it? And that answer is yes. But again, it's specific people. There's really two big groups that they're looking for. One is people who did not apply. So people that did not apply timely, a lot of people just were not aware of the program. What we're seeing with people we work with is a number of sole proprietors didn't appreciate that they could have applied. They thought, I need employees, forgetting that they are their own employee, so they would have been allowed. So if you or your clients may have had some sole proprietors that did not expect or said, well, I just don't feel like it right now, and then realize their business is not going to come back as fast as they appreciated, they can apply for a first draw loan. There's another group that I know we had some people debating about, and that was, you may have repaid your loan. Remember back in May when the question was I entitled to the loan or not? I got the loan because there was all the stuff in the news about the LA Lakers and Shake Shack getting loans, and they probably didn't need them. And so they're pushing really hard on what you really should do. So the question is, if you paid back your loan and really looking back, you really didn't need to or should not have, the amount you paid back, you can have the ability to look back and get those additional funds in most circumstances. What if you just made a math error? I know a few people that did this when they pulled together their applications. They just made a whoops. You forgot to pick out all the employees. You only did it on yourself or whatever. If you made a whoops, you can't get additional funds because the rules didn't change. It was your error, not the government. So no, you can't ask for additional funds under PPP1 for here, but it does not, if you qualify for a second draw loan, you can use the correct amount of employee compensation when you apply for a second draw loan, if you are available. So if the government changed the rules, or if you weren't aware, or if you didn't understand whether or not you could keep your loan, those people are really the primary people that can go back under PPP1 for a first draw loan. Otherwise, it is what it is. You have until March 31st, 2021. All the banking, lending institutions are available to accept loans. There was about a week in there where it was being staggered in from the loan people that pretty much handled disadvantaged areas that they didn't think were covered well enough up front, to loans with $1 billion or less. And now, as of last Tuesday, everybody can now apply. Application is the same. It's based upon payroll costs. It's so remember, payroll costs. It's the same type of payroll costs as were the first time. None of that has changed. Okay. And you have to document how you got to your payroll. So make sure you pull together the proper details. So when we're looking at proper details, I thought it'd be wise just to put in some information on based upon what you should do based upon your tax type. So for sole proprietors, here's our things they're going to look at. That's not a mistake. You can look at your 2019 Schedule C. Remember, that's what you did. You looked at the year before, and that even though 2020 is done, you look to 2019. You have to show that you're in business. One of the nice ways to do that is to get 1099, and for 2019, it's a 1099 MISC. Maybe you got 1099Ks, invoices, bank statements. You have to show that you were actually self-employed in 2019, because remember, you have to be in business also on February 15th, 2020. So you have to show that you were in business there. So there's some ideas about what to pull together. We need to determine monthly payroll. None of this has really changed. It's just to, just kind of nice just to lay out what do you need to do mathematically. So you're going to pull together your employees. When you look now, you got 941 forms that are done. Remember the pre-tax health insurance, the pre-tax Social Security, the 401ks, et cetera. You want to make sure that that's being added to your wages. You want to take away, though, you have to, any excess above 100,000 and any amounts to somebody who might be working outside the United States. Now you look at employer contributions for group health, life, disability, vision, dental, the things you would really consider as part of your overall medical plan. Notice that Medicare premiums are not deemed employer contributions. The Medicare tax. So, and you get allowed to add state unemployment if you so wish. You put that all together, you divide by 12, that gets you a monthly amount. Then you multiply it by 2.5. That gets you your maximum loan. So it'd be nice to have a list of a couple of the other fringe benefits on whether or not you have pre-tax parking. There was another one that I hadn't really spent a lot of time on. But you're just trying to get to what did the employee earn. Now, when you look at partners in a partnership, there are some changes there too, but just to kind of walk it through. Remember, in a partnership, you do have to take have to back out half the self-employment tax, which that's what that 0.9235 does. You're not allowed to add in the health insurance. You're not allowed to add in the profit sharing. You're capping it out at 100. In other words, you're not allowed to add those benefits to get above 100. You're supposed to back off 179, unreimbursed partner expenses. And if you got some oil and gas, there's some other modifications that are required. So there's a brand new form to apply for the loans. When you look at the loans, a couple things. Notice the year of establishment. That's a new spot there. Most often here, don't get too worried about 500 versus 300. Most everyone's going to be 500. There's some specific 300 if you look in the details. And it has to do with some 501c6 organizations. That is, so I wouldn't, most often 500 is going to serve you well. Then there are some other size standards that are important. The NAICS code normally is not a big deal, but as you will see at PPP2, make sure you have the right code if you are a hotel, restaurant, etc. We'll get more into that, that's important. The other thing that changed is, got the normal stuff you'd have, payroll, rent, mortgage interest, utilities, right? That's what it used to be. Well, now there's a few more expenditures that you can use. Some operating expenses, property damage. Will help our clients here in Minneapolis and St. Paul that are dealing with some of those issues. Supplier costs and PPE expenditures. So it's okay to mark. I would expect most people to mark all 7 of these. I think most people would have, even if you don't have them, you could cover all of those. So there's no reason not to mark them all. Notice that the ownership is 20% or more, where it's important. The questions in here really haven't changed a lot. So I think it'd be fine there. The questions in here, there's a couple the certifications up above. I liked here that they did add a new thing. I understand the SBA encourages the purchases of American-made equipment and products. I thought that was nice. But the really, most of these are not an issue. Just keep track of the first. It's really the first 2 that are most important. You were in operation on February 15th, 2020, and the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. That's the rest of it. Works out pretty much. It's the same as what it's been. All businesses use the same application form, regardless of the size. So while there are 3 different forgiveness forms, there's only 1 application form. Now, banks can choose to use their own form, and that's fine. But keep in mind that there's only 1 application form, regardless of the size. They made it clear, and this is one of the things we had some debates about internally, is what happens if you're a sole proprietor or a partnership where just the partners work? Do you have any employees? And the answer now is yes. The sole proprietors count themselves, partners count themselves when applying for a loan. In other words, you always have to have at least 1 employee. So it's just a clarification, really doesn't impact things. And under the year of establishment, in the upper right-hand corner, if you're self-employed, you just write NA, not applicable, not applicable. So that's the basics of PPP1, but now we have PPP2. So this is more targeted funding meant for businesses that are small businesses, use the funds under PPP1 and were financially impacted. That's just the kind of overall goal understanding that I've been working with. So what does that mean though? So you can apply for a second draw PPP loan. The loan terms are going to be the same as the first draw. That is, you it'll be a 1% loan, 5-year term. Loans payments are deferred till 10 months, as long as you've applied for forgiveness within 10 months of the end of the covered period. Same stuff, just a second. So think of it, I think that's why they use the term second draw. It's the same type program, just a second bite at the apple. So you're allowed to pay some other costs, just like with the PPP1 expanded, PPP2 is expanded. So it's the same type costs, but you still need at least 60% of the forgiveness amount must be for payroll. So yes, they expanded the number of costs, but remember, payroll drives the bus. Payroll drives the bus. Now there's criteria for what fits. So what fits is you received a first draw PPP loan and you will or you've already completed or will have used the full amount for only authorized uses, and that expenditure, those amounts must be spent by the time the funds have been received. You have no more than 300 employees. And remember, when they're counting employees here, it's not FTEs, it is employees. And you can demonstrate at least a 25% reduction in gross receipts between comparable calendar quarters in 2019 and 2020. Now, when to apply? So you can apply anytime between now and March 31st. And PPP program has specified dollars. So there's $284.5 billion allocated to the expanded PPP program. And it's to cover additional first and second draw loans. Now the question is, do you need to make sure you stop listening to the seminar so you can quick fill out your paperwork to get ahead of everybody, because you want to make sure that there's still funding available? Well, yes, you do want to make sure you get there in time. I think we would all agree with that. But think about it. How fast do you really need to move? Although more funding was allocated to first round PPP loans, there were about $525 billion in loans under the first PPP program. These are loans applied for by and funded by August 8th. And that was everybody who knew about the program and wanted funds, because remember, there was funds left over that were unallocated. So then we look at the loans of over $2 million accounted for about 70 billion of the total. Loans cannot exceed $2 million in PPP2. So if I back off 70 billion, I'm really looking at about 445. Then businesses without a reduction in revenue in a calendar quarter cannot apply, or a large enough reduction. Well, So that's going to push the amount further. So does it make sense to get your ducks in a row, get everything put together? Yes. Do you need to make sure you stop listening now and run to your bank like immediately? Probably not. Because if you look at that, there are funds. I'd love to tell you the exact date to to go, but we have to look at something else before we decide when you need to apply. And that is the interplay of the employee retention credit and PPP. We'll talk more about the employee retention credit tomorrow, but it's important to bring up part of it today. The employee retention credit was expanded to cover wages for January 1st to June 30th, 2021. That is brand new. What is also brand new is you are allowed to receive a PPP loan and have it forgiven, even if you are going to take the employee retention credit. Those are huge changes. But wages where you're going to receive a retention credit will not qualify for PPP loan forgiveness. The reason this is so important to you about the timing is, if you allow me to talk in round terms, the 24-week period of time, which is the maximum coverage period, I'm going to call that 5.5 months. Well, if I immediately apply today, 5.5 months gets me to the end of June. That is every wage amount I'm paying. All I have to worry about that interplay of, is it better for me to take the retention credit? Is it better for me to use these dollars for PPP forgiveness? I don't know how it's going to work. That's where your entire payroll fits in there. If you wait till the end, you get your loan by the end of March, I have the same 5.5 months. However, 3 months of that time I have to worry about, is it better if I take the employee retention credit, or is it better that I use these dollars for the PPP loan forgiveness? Pardon me. But I'm going to have 2.5 months where I don't have that decision. So I can make it clear that, okay, I'm going to worry more about the 2.5 months for PPP forgiveness. And that'll be my wages in July, August, and half of September. And then I'll take some of my other employee expenses that qualify as wages, meaning my health insurance, my profit sharing, my unemployment taxes. Maybe when I put this all together, I could still get maximum credits and maximum PPP forgiveness. So that delay gives you far more flexibility and maybe additional dollars. So you have to balance off what is the risk of delaying to allow additional retention credits versus the risk of the PPP funds not being there. What's the right answer? Like all good things, you've listened to enough of my seminars, right? It depends. For a lot of people, I could see a lot of people waiting. If you had that reduction in to qualify for the retention credits, it would make sense to wait till maybe the middle of March. I'm not going to have anybody wait till March 31st because I don't want to. I want to make sure that their application gets in timely. But think about it. This whole process is going to be a process. So you got a same 8 to 24 week period. And you have to watch how your payroll is going through. All right, Matt, I need your help here. We have a polling question here. So can you help me with that? So our polling question is whether or not your monthly payroll for PPP2 is based on 19, 20, or 19 or 20, whichever do you want? I think that that gives us an idea. Looks like most of you got it all figured out. Thanks, Matt. That's right. How could I ever have an answer that wasn't it depends, right? If the answer wasn't it depends, you'd have to wonder who's actually giving the seminar. Thanks, Matt. So that's right. So you get to choose whether you want 19 or 20. Now think about it. If the only people that qualify are people that had a reduction in revenues and that can say that they are that they need the loan based upon current economics to pay operating expenses, it's unlikely that your payroll is higher in 20 than it was in 19. Now, that doesn't mean everybody, but realistically, it probably is that way. So most people, I would assume most people are going to do 19, but it is an option. So for most people, it's the same at 2.5 months. However, people in the accommodation and food services, that is, they have hotels and restaurants, you get 3.5 times average monthly costs. Same loan cap of $2 million, but a higher payroll factor, so more people are likely to get a higher loan. If you think about it, that's about a loan of about 75% more. So if you would have qualified for, if you had $100,000 of monthly payroll, you get $250,000. Here you get $350,000. So not 350. It'd be 350. Yeah. So that's where that NAICS code is, because that's how they're defining. That's how that's the way the statute's drafted. So you have to make sure you fit in that right code. So what are gross receipts? So for a for-profit business, you look at from all revenue in whatever form received or accrued in accordance with the entity's accounting method. Now, it says that the terms carry definitions used and reported on the IRS tax return forms. But that doesn't necessarily mean that you have to use tax methods, and we'll get into that why. So let's think about things that aren't in gross receipts, that might be in your deposits. Well, taxes collected and remitted, sales taxes, okay? So you charge sales taxes, those sales taxes are not part of your revenues. The other big thing is dollars you're collecting as an accommodation, that's what I'm calling it. So think about it is you run a travel agency, you're paid for your services as a travel agent, right? But as an accommodation, you charge and collect the dollars for the airline ticket, and then you pass those dollars to the airlines. Same thing with the real estate agent. You may help at the closing, and the dollars for the house sale may have come in, but what you get is really your net commission. So just got to look through, what are you really selling? And that's important on the other, at the bottom too, because if you look at, if your job, what you're selling is you are building a home. If you're building a home, you may have subcontracted most everything out to other builders, and you're just being a quote unquote true general contractor. You're just managing the whole project. But your project is to do what? Your project is to build a home. So there, when you pay the subcontractors, the whole part is your revenues, then you're allocating to the others. So think about, what are you really selling? One thing that is clear is the receipts do not include PPP loan forgiveness. Thank goodness, because that could have a major impact on trying to obtain a reduction if I would have had to include PPP or idle advance forgiveness. But do I use book basis or tax basis? It's really not clear. Because if you look at the instructions through the process of what you need to submit, sometimes they're talking about your financial statements. Well, your financial statements may not necessarily be on a tax basis, but they say you can use them. They talk about using your tax return. Well, your tax return, I know that's done on a tax basis. You can use them. In seminars with the AICPA, the American Institute of Certified Public Accountants, they have made it very clear in their last 2 town hall meetings. Yes, we understand you want clarification. Don't expect any. Don't expect further clarification in this area. You just have to use your judgment. And what you think about, that's the purpose of the program, is to make sure if you're always following the same method of accounting, it's likely you'll come to the same answer either way. But so just be consistent where you're doing things, and I think that'll lead you a long ways. A lot of words on this slide. I'm not going to go through all the words. What it really says is, if you were not in business for all of 19, there are different reference periods you can use to see if your gross receipts dropped. Okay, so that's what that is saying. And this gets to that documentation. So if you look here, quarterly financial statements, they don't need to be audited, don't need to be reviewed. You can use your internals. You just got to attest to them. So, and then they're talking about income tax filing. So this shows you why it is not clear what we need to do. Just be consistent in what you're going to put together. So as an alternative to looking at quarterlies, you can use your annual tax return and compare your annual 2019 to your annual 2020. And if you could show that you dropped at least 25%, you know you made it. Now, so Todd, I thought it was a 25% in any one quarter, but mathematically, if I drop 25% for the year, either every quarter is down 25%, or I have a quarter that's down more than 25%, somewhere in there. And so they know you will qualify if your annual is down 25. So this will help guide you what they're really looking for. They actually got line reference numbers for exactly what to pull together, exactly what to think about, and how to move forward. So when do you need to provide the documentation? That was another question we're getting. So if your loan that you're applying for is greater than $150,000, you must provide the documentation at the time of application. If your loan is for less than $150,000, you can wait to provide the documentation until you're seeking forgiveness. Now, why would they have that there? My personal opinion is that more of the small people getting small loans are going to use their tax returns to document the reduction of 25%. By allowing them to wait until the time of forgiveness to apply for this, to document this request, by then their tax return should be done. I mean, we're moving forward here at JAK, but I will tell you, we don't have many tax returns done yet. And with some other things that are going on, namely how Minnesota is going to take care of PPP forgiveness income, we may be extending more. This will allow us to do that, to address our clients in an efficient manner, so that people with lower dollars that are probably using their tax return, they're given time to get the returns done. People with higher dollars most likely have some kind of good internal accounting, and they can use that to document the reduction of revenues. You can use fiscal years only if your year end is January, February, or March. So when you have a 25% reduction in any one quarter, that doesn't mean your annual income is down 25%. It doesn't mean you could have actually had an overall increase potentially, because only one quarter needs to be down. You can have other quarters up. But remember, when you apply for the loan, you have to say, current economic uncertainty makes the loan request necessary to support the ongoing operations of the applicant. So if things took a nosedive and you're doing really well now, it's going to be unlikely you can make that certification. Just talk about some of the other documentation that you can use for payroll costs. So a lot of times people will compare back the NAICS codes on their tax return. So just make sure on your tax return you also have similar code, okay? If not, you're gonna have to document why you didn't have the right, what the code should be. So the second draw application form, similar. The only thing that's really different here, you got the 2.5 or 3.5. You've got, then right in here is where you're showing that you have the reduction, okay? There's the rule for the 150. You will see that there's some additional certifications here, but nothing you need to worry about. They're saying you got a 25% decrease, that you spent all the money from the PPP1. There's a new one here about received a shuttered venue operator grant. And then it kind of continues here. So, I mean, there's a few things that are new, but nothing that I'm really concerned about. Just they've added some more things about, no one from elected official, no president, vice president, member of Congress can own part of your business, etc. So, but this is something we've heard consistently: be prepared for a longer approval process. The SBA is actually checking more than on the initial PPP applications. If you think about it, they were just told, get the damn money out up front, right? It was move hard, move fast, get the money out. Now, yes, they do want to help, but they're saying we need to spend a little more time looking at this. So just spend some extra time reviewing your application to facilitate smoother loan approval. Make sure you have all the ducks in a row, that you got all the documentation done. Make sure you have the loan number from your first loan. Those little things will slow down your process if they're not available. Promise you we're almost there here. We're just a little bit about forgiveness now. So the PPP forgiveness short form exists. That's right. It came out on the evening of the 19th. Good for them. This is the form. They were required by statute to make it fit, not on a postcard, but on one piece of paper. So that's what they did. It fully fits on one piece of paper. You are going to mark that you fit all the rules, and life is good. What they do is, rather than setting out all the rules, they're saying, by the way, you're following all the rules. Go find the rules elsewhere. Why? Because we were limited to one piece of paper, so we're not going to put the rules there. They can always ask more. You need to maintain the documentation, but you're not submitting all the documentation. That'll make a big difference. And notice it's 150, not 50. There are some different rules between 50 and 150. Remember, you don't have to worry about changes in FTEs if it's 50,000 or less. Why is that group? Because the SBA was using their de minimis authority to get that through. Technically, you have to worry about FTEs between 50 and 150, okay? But for most people, it's not going to matter due to the math. We've talked about that, but you need a loan for 2.5 months of payroll. You have 5.5 months to use it. Plus, you could also use it on rent, utilities, etc. So it shouldn't be a problem. So there is a new PPP forgiveness long form. Now, if you look on here, what's really changed? Look right here, they got the additional expenditures that you can use. These are our friends that always have been on the form. They had added in the additional ones that we weren't, pardon me, that weren't there before. Other than that, it's following the same. If you look here, really things haven't really changed. But one of the things that have changed is you have a variable covered period. Also, pardon me, I didn't point this out on here. Notice here, it talks about a covered period. What's something that's missing that used to be there? That's right, the alternate covered period. The alternate covered period does not exist anymore. You just have a covered period. Why? When they moved from 8 weeks to 24 weeks, you know what? Those nuances of an alternate period weren't important because there was plenty of time to spend the payroll. So they cleaned up the rules. Those rules don't agree for alternate covered periods. Your covered period 2 is, we'll get to, is not a set period of time. Wonderful friends on Schedule A. Let's talk about your FTEs. Now remember in here, I just want to remind you, always use the easiest form you can. If you didn't have a reduction in FTEs, please use the other form, the easy form. It just eliminates these calculations for you that don't matter. That's all the difference is between the easy and the long is, remember, S is the one-page shorty, okay? Easy is the middle one and the long one. The only difference is you're certifying that I don't have to worry about all those FTEs because I didn't reduce my overall FTEs. If that applies, please use that if possible. If you have 150 or less, please use the shorty form, okay? Then you got the Schedule A worksheet. Nothing's really changed other than getting rid of references to the alternate covered period. And the medium form. So the medium form, remember, you're just not showing all the calculations, you're just putting everything together, making your certifications, and life is good. Thank you for your patience. We're getting down to the end now. So compensation caps, just reminders that for non-owners, $15,385 for 8 weeks, $46,154 for 24 weeks. Owner employees, it's $15,385 for 8, but you're capped out at $20,833 or 2.5 months of compensation at a rate of $100,000. Your 2019 compensation, if it's lower, you can't pay yourself more now than you're paying yourself in 2019 to get additional forgiveness. So if you're paying FICA games, that can, in 2019, that can come back to haunt you. And the caps are across all businesses, which you had a stake. And you can pay an owner more than that, you just can't use it for forgiveness. Who's an owner? Hasn't really changed. So CNS Corp, where there's a 25% threshold for ownership. All partners are deemed owners, and all sole proprietors are deemed owners. So if you look through here, there's some different things you can look at, what you can add or not. But the covered period is now variable. It's at least 8 weeks. It's no more than 24 weeks, but it's whatever period you choose. If you want to use a 14-week period, go for it. You want to use a 22-week period, go for it. So it's between 8 and 20, no less than 8, no more than 24, but anywhere in between. But keep in mind, a variable payroll period creates a variable maximum payroll. So you can't use the 24-week maximum if you're using a 10-week covered period. You have to use, in essence, it's about $1,923 per week. That's 100,000 divided by 52. So if you're using a 10-week period, it's 19,230. So keep that in mind as you look at what the variable wages are. Well, what I can do here is I can look to see if there's many questions here. Otherwise, it's but that's about what we got. Matt, do we have any questions? I'm having.
Yes, there's a number of questions that were posted to everyone.
Okay, now I got them. I had trouble getting them up. So here, is there a way to print the slides now? Unfortunately, no. I had them here. the most question on which additional businesses, it's mostly some additional nonprofits, some veterans organizations that can do that. Question, what does will or has used the PPP loan mean? So what it is you've used the proceeds from the First Draw PPP loan in full on qualifying expenditures. You have to make that certification before that certification has to be effective by the time you receive the funding. So that's why will or has. You could have applied before you've used all the funds, saying, by the time you give me the loan, friendly banker, I will have used all the funds. There's a question about the economic uncertainty. You just need to be able to make that certification in good faith. That is a correct statement, but I think you just need to do the right thing, and you know whether or not it's made in good faith. If you look, there is in the slides, there's talks about how to deal with proceeds if you weren't around for all year. In 2019, in 2020, when you apply to your first draw PPP loan, can you use the same payroll for the second one? Yes, you may. And that makes the process pretty good because you've already got all the documentation to your friendly banker. Are Minnesota employment benefits impacted for PPP loan recipients? I'm not sure. Can banks require the documentation for reductions for loans under 50,000? That you're still going to have to document it. It's just a matter of the timing of when you have to document, is my understanding. So I'm glad. Looks like I've got most of the questions through here. Again, let's just kind of keep in mind there's a lot of things that are going to be changing. We're here to help you through it. Any questions, please let us know. With that, I've always been told you should always end a meeting just a little early. So we're about to the end of our hour. So have a great day, and we look forward to talking to you. Remember, we're talking about retention credits tomorrow, same time, noon to 1, if you have any questions on retention credits. Have a wonderful day, and we'll talk to you soon.